there's going to be a panic out of the dollar at some point when people start realizing, wait a minute, when they realize what's going on, when they gain an understanding of what's known as modern monetary theory, which is not modern, and it's one of the more stupid ideas that's gained currency in all of world history, which basically says, print up as much money as you want. It stimulates the economy. This is all crazy for all kinds of reasons. But as people see that the cat is really out of the bag, they're going to start wanting to get rid of dollars, and especially bonds. The bond market is much bigger and actually more important than the stock market. And people that are sitting on bonds right now, they're actually sitting on a time bomb. Bonds are a triple threat to your capital. This is why gold is going up. Because people that own bonds in particular are going to see, wait a minute, why do I have these bonds in my pension fund or wherever they are? They're a triple threat to my capital. Number one, the dollar is going to be inflated very rapidly, and bonds lose value proportionally with inflation. Many, many trillions of dollars in bonds. Where's it going to go? A lot of it is going to flow into gold. Why? Because gold is the only financial asset that is not simultaneously somebody else's liability. And I think after the current system collapses, and I hate to say it, but it is going to collapse into a smoking, cratered mess. There's no way out at this point. I hate to sound so radical. It's a hair on fire kind of statement. I hate to say things like that, but I just don't see any way out of it. I really don't. So where is that? What's going to happen is that the new monetary system, I suspect, is going to be based on gold. But we don't have to wait for that. Ever since I first understood the argument for gold, which was made clear to me in my old friend Harry Brown's book called You Can Profit from the Coming Devaluation. Harry wrote that book in 1969, 1970. I read it in 1971. And I didn't have any money then. I was just out of college. So, but then again, gold was only $35 an ounce in those days. So, I started buying some gold, and then I got into gold stocks. Incidentally, that book is even today a brilliant explanation of why gold is what it is and why you should own it and so forth. Let's look at it this way. In 1971, gold was a superb speculation. A good speculation, incidentally, is one which is very high potential and also very low risk. Most people think that speculations are, risky. Maybe you make a lot of money, but maybe you lose it all. No, that's not a good speculation. That's a gambling bet. Very different. A speculation is one where you're basically betting against the stupidity of government, which is almost always a winning bet. And in the case of gold, it had been artificially suppressed by the US government for years. So it was a one-way street back then. But let's look at the real price of gold, okay? So it was artificially cheap back then, before Nixon closed the gold window to the Europeans, and the price of gold was totally freed up on, I think it was January 1st, 1975. So here's the story. Went from being artificially cheap to, by the time January of 1980 came, it hit $850 an ounce. And it was subject to a bubble. It was a mania in gold because it looked like the dollar and it looked like civilization was going to collapse in a lot of ways. It was a hairy time with interest rates where the government was paying 15, 18% for money. I mean, people can't even imagine that today. So yeah, gold went into bubble mode, and that was 1980. But the next time it hit a bottom was in 2001, when gold was about, I think it was 2001, gold was about $250 an ounce. And of course, the dollar was worth a lot less in 2001 than it was in 1980. So here's the interesting thing. In real terms, gold in 2001, when it was 250, was actually cheaper than it was in 1971 at $35 an ounce. So I was all over it in 2001. And so where are we now? From 250 to 2, so it's gone up 8 times in 20 years. It's not the giveaway bargain that it was in 1971 or 2001, but in real terms, gold has gone up since 2001, 3 or 4 times. It's hard to say what the real inflation numbers are, because I don't trust the US government's inflation numbers or any other numbers much more than I trust those of the Argentine government, quite frankly. They're all fudged, they're all manipulated. The problem with the dollar is it is the unsecured liability of a bankrupt government. And the US government is bankrupt. It is totally impossible for them to ever pay off their national debt. So the dollar's on its way out, and the Russians and the Chinese have been buying huge amounts of gold over the years. In fact, central banks now, for the first time in many, many years, are actually net buyers of gold. Why? Because they have reserves. And what are most of their reserves now? US dollars. I mean, central bankers aren't the brightest crayons in the box, but some of them aren't stupid, and they don't want to be holding this hot potato called the US dollar. So what are you going to use as a reserve instead? The Argentine pesos? I don't think so. They're buying gold.
Gold is more or less reasonably priced relative to everything else. Relative to the clothes you buy, the houses you live in, cars you drive. Look, gold has gone from an artificially suppressed price of $35 an ounce back in 1971 to about, what is that, I don't know, 1850 or something like that today. So it's done quite well. And what you should treat gold as today is not as a speculative vehicle. It might be quite a good one in the future, but treat it as something that you use to save. Own gold for prudence, and safety, and security, not for capital gains, especially right now. I mean, the last time you could buy gold as a great speculative vehicle was back in about 2001, when it sold for $250 an ounce. And back then, in real terms, it was about as cheap almost as it was in 1971. Well, that's not the case today. So to answer the question, I remain a long-term bull on gold, and especially on the mining companies right now, which are really very, very, very cheap at this point. And gold isn't a bet on inflation so much. It's a bet on monetary chaos and economic chaos and other kinds of chaos. And we're going to see a lot of that before this decade is over.